Hey, John, continuing on our finance podcasts, what's today's topic for the day?
Today's topic of the day is credit cards.
Nice. I have a lot of interesting things to say, and I expect you also have a bunch of interesting things to say about credit cards.
We both are users of credit cards,
Multiple
so
credit cards, yeah.
we're going to go into details for each one.
What are the different types of credit cards?
There's a lot of different types of credit cards, but the ones I have is cashback credit cards and travel based credit cards. So you get points for booking travel through it.
Cashback cards just mean that every time you make a purchase, you get a certain percentage as cashback, 1 to 3% off every purchase. Some credit cards, you get even more, 5% cashback on certain specific categories. And the different categories they have for all these cashbacks are gas, groceries, online shopping, medicine, that kind of stuff.
How do these credit card companies make money if they give you so much money back? They charge the companies that accept those credit cards, let's say Visa or MasterCard, they'll charge a specific amount of rate on top of the base purchase to the company selling the products so that it's in the hidden fees. That's how they can afford to give you 5% cash back on your whatever you buy with it.
That's also why certain stores won't take certain kinds of credit cards. Some common ones being Costco only takes in Visa, right? Costco does not accept MasterCard. There's a lot of random stores that will not accept Discover cards. Yeah,
exactly. And these cashback credit cards too, like you said, they only offer 5% back on certain things. Like for example, Discover will only offer 5% back on gas stations for the next 3-4 months. And they'll switch it up based on what month of the year it is. So these companies, they have tie-ups with certain merchants, for example, gas stations with the Discover. They'll say that they'll charge us flat rate for 5%, let's say. And then if you were to spend it only on gas stations, they'll break even. Right? They'll charge 5% to the merchant, you get 5% back, they break even.
Right.
But if you were to keep on using that credit card to buy on Amazon or grocery shopping, you don't get that 5% back for that. You maybe get 1% back. And then that's where they make money.
Right. John, why do you think you should get a credit card, right? Why can't I just use my cash or use just debit cards and live my life? Why do I need a credit card? Is it mandatory? Can I just live my life with debit cards?
You don't need a credit card, but you need a credit history because, like it or not, you're going to take out loans for purchasing maybe your house one day, your car, or just may not have enough money to buy everything you need in a month. Mm-hmm. So you will need some type of credit history, and having an early start to your credit history is actually really good for your credit score. So it's actually good to have a credit card as soon as possible, even though you never use it. Mm-hmm. Because one day you will use it.
Exactly. And I think for our audience, just a quick summary on credit cards versus debit cards, right? Is debit cards, you already have the money in and you're spending your money, whereas credit cards, you're borrowing against the bank. And at the end of every month, you're supposed to pay off the debt. And this is another way credit card companies make money. If let's say you're unable to pay, because you will have a credit limit and you can borrow as much as you want till that credit limit. And if you're unable to pay off that credit at the end of the month, you can do a minimum payment or anything else, but you will get charged a high interest rate.
It's like 20%,
20, 22, 23, and it's variable, I think, in many cases. So ideally, you always want to pay off your credit cards. You do not want to save any of that money unless until there's no other choice. And even then, I'd say take it with a grain of salt.
And if you don't pay off your credit purchases every month, it actually affects your credit card negatively. So you should never miss a payment, and you should always pay off your credit card.
Exactly. That all of those things account for the credit score, right? Getting to the credit score, I think credit score is a total of 850 points, right? And you want to start building your credit score as soon as you can, which means I think you can get a credit card when you turn 18. Is that right?
I think I got my first credit card when I was actually younger in high school because my parents co-signed for me. So.
Okay. Yeah. So in my case, I moved in, I came over to the US for grad school. I didn't have an SSN. I think I got my first part-time job maybe a year and a half after. So I got my SSN then, but I wanted to start building a credit history as soon as I got in here. So I just there's this Bank of America card which doesn't need an SSN. SSN standing for Social Security number. Bank of America doesn't need an SSN, so I got that card as soon as possible. Because once you get your first card, right, they don't give you high credit limits or anything like that. It's maybe $500 or $1,000. That's your credit limit.
So the credit limit is based on your income. So you had to tell them, you have to disclose how much income you make.
I also think in many of my cards, if I just use the cards and pay them properly, they automatically many times raise my credit limit, which is great. Which is great for different reasons. It's not to increase your spending, and ideally you shouldn't. You should always spend only what you can afford. But it's great for different reasons, which I think we'll get to in a little bit. So yeah, you want to get your first credit card as soon as possible. Doesn't matter. Get a free credit card. Don't get any of these yearly. Don't pay for a credit card every year, right? Wait till you know how to use credit cards before you get into the more fancier stuff, I'd say. But what are the different ways you can build a credit score, right?
So the first one is the duration. Like you said, get it as soon as possible. There is no late payments. And then there is the number of credit cards. This is very interesting to me. I didn't realize if you have more number of credit cards, it actually positively impacts your credit score.
Exactly. I think till you have around, I think a safe number is around 10. Up to 10 credit cards, I think your credit, it's actually better. If you can manage 10 credit cards, it's actually better. Once you go above that 10, then things start getting worse.
I see.
So at that point, the banks start thinking you just have too many credit cards. You're not able to handle your finances, stuff like that.
Yeah.
But till then, it's actually good.
There's actually different types of loans, and credit card is only one type of loan. So they actually take into account, for example, a car payment or a house payment or student loans. So these different types of loans actually do matter to your credit score too. And then one more thing, your credit utilization percentage also matters too. So this is very useful to know because you can ask to increase your credit limit. The banks, whenever you apply for another credit card or a loan, or even when you're renting a place, they'll do a soft credit check and they'll see that you have a good credit score. So everything you do in life will actually revolve around the credit score. And if you have a good enough credit score, you'll find it's much easier to go through life with a good credit score.
Yeah. Actually, you brought up a great point. John, what's the difference between a soft credit check and a hard credit check? What is a credit check, right?
So a soft credit check is easier to get. It's what you see when you go to the apps like Experian and see the FICO score. But the hard credit check is something that you physically need to sign, and the people will go to the authorities, and when I say authorities, I mean the financial institutions, and see what actually your like accurate credit score is.
Yeah.
And the more hard credit checks you have actually negatively impacts your credit score too. So it'll be on your record for a couple of years that you're getting more and more credit checks.
Yeah.
So this could be kind of risky to loan providers because it seems that you're trying to get a lot of money.
Mm-hmm. And yeah, because the reason they do this, the times they do hard credit checks is when you apply for a credit card or when you apply for a loan, that kind of stuff, right? And the reason they do this and the reason it negatively impacts your credit score is because, let's say every month I just walk into a new bank and I say, hey, I want a credit card, right? And let's say ideally I get approved for all of this. So every month I'm just getting $2,000, $5,000, $10,000, maybe $20,000 credit limit increase, which is great for me, but I can just maybe spend the money and I probably won't be able to afford it, which is bad. So that's why they do the hard credit checks. Because when you walk into a bank, that bank, let's say you apply for a credit card, that bank will know how many times you've applied for, how many other cards you've applied for. And if it's too many, they'll reject you. For example, Chase does not give you a card if you have applied for 5 credit cards in the previous 2 years. So keep that in mind. And other bank, I think it's pretty safe if you keep applying for credit cards. I think it's pretty okay if every 6 months you get a new credit card if you are on that credit card roll. I haven't done it. I don't think I'll do it that quickly. You know, every time I want to get a new credit card, I always check that I'm using everything I own to the best and that the new ones I get have uses.
So a credit check doesn't only apply to getting a credit card. I got so pissed off a couple of years ago when I was trying to find a place to rent, and they also do a credit check.
Sure.
And they told me that it's a normal credit check. I didn't really realize what the difference is between soft and hard. And then I find out later that they did a hard credit check. I ended up not getting the place. But if I had known that they were going to do a hard credit check, I wouldn't have even considered that place.
Yeah.
Because you start doing the application and suddenly you see that they did a hard credit check. And now my credit score is impacted on it. It's in my records for a couple of years. So that also impacts everything. So even when you're trying to find a place to rent, this also is something to keep in mind.
Yeah, exactly. And I've had to once I went for a test drive for a new car, and I think it was Jaguar, and they wouldn't let me test drive the car till they could do a credit check, which I said, yeah, go ahead, do a credit check, because back then I wasn't too careful about all these things. Not that it affected me too much, but yeah. And then I test drove the car. It took me a while before I figured I couldn't get that car at that point. Anyways, moving on. Is there anything else you want to talk about? Do you want to end it here?
I think that's a good place to stop.
Yeah. Okay. So let's stop here. And guys, let us know if you like this episode on credit cards and if you want to know anything more. And we would be happy to do a follow up. I'm Soorya Ramesh.
And I'm John Ravi. And you're
you've been listening
to...
Let's do that one more time. Do you want to say it this time?
I mean, you can start first, I guess. I say two brown accents. Yeah.
Okay, cool. Hey everyone, I'm not.
Today we're going to talk about credit cards. Let's do things differently this time.
Let's do this one more time. I'm Soorya Ramesh.
And I'm John Ravi. And you're listening to... Let me do it one more time.
We suck at this.
I stuttered. I don't know. The outro. Last time.
I'm Soorya Ramesh.
And I'm John Ravi. And you've been listening to Two Brown Accents.
We'll see you in the next one.
Bye-bye.